you see business is kind of booming. It seems to be like, if you know the right people, you've been in the business a long time, then certainly you have the ability to do a lot of deals.
Absolutely. You are your own business in real estate. We all work under the companies because the law requires it. Mm-hmm. But when it comes down to it, they're picking the real estate agent that they've heard the best things about and can back it up.
Yeah, I was asking that even at the beginning of the show to kind of get through that is, you've worked at different companies before, and when it really comes down, the rubber meets the road, it's the agent. Because even all the stuff Tyler was talking about, there's probably agents who don't do all that stuff that work at the same company.
Absolutely. I've worked with Windermere. I work with Keller Williams. The bells and whistles all sound great when you go and make a presentation. We all have that available to us, no matter what company we are. None of that is absolutely exclusive to one. And it's a matter of picking and choosing what works for you, and then you can get across your clients because it's results results are the end that matters. And that's what clients want to know is, what are your results? Who have you worked with?
Yeah. So what are some of the factors, I guess, that are really, changing some of the results over the last few months? Because, when we talked last month, a few months ago, and over the last year, what really came to light is that it was crazy. And now it seems to me, at least, a little bit of the craziness has backed off, and there's a little bit more sanity.
It's calmed down a little bit, but it depends on what area you're looking in. New construction, it's still, if you're in the Bellevue area, trust me, I have a client, you better be on that waiting list in that new construction site because everybody who's trying to get into that, there's still not a lot of new construction that's hit the market. Mm-hmm. But in the neighborhoods on the resale market around the Seattle area now, not everything is getting the multiple offers. That initial frenzy of 13 offers on one place, it's kind of calmed down. Now it might be 2 offers, it might be 3 offers. A lot of it is a lot of buyers have gotten in the market. It's always hard to predict. Some people are saying, well, it's slowed down because it's in the summer, it's hot, everybody's on vacation. Well, who knows?
Right. It's never a good time, right? Kids are in school. Kids are out of school. Holiday time.
Yeah, we can factor all those things in if we like. But, rates have creeped up. But in the same sense, it's not like decreased my business with buyers. I've got more buyers now coming in who are saying, well, we were waiting and we thought it'd go lower. Now that we're seeing them go up, we're frantic.
Do you laugh when you hear people think they would have gone lower than they'd ever been in the history of mortgages?
I never laugh at my clients.
After you walk away, okay. You don't have to bust on the people that you work with, Eric. Eric Robison joins me with managing broker with Keller Williams. Tell me about the recent mortgage hikes and how that has affected maybe the psyche of people out there.
Well, what's starting to happen is some buyers are thinking the rates are going up. Now maybe it's better I just stick with renting. And the reality of that, it's not true. Even if the rates are going up to 5%, rents are going up too. Like you just talked a little bit ago, Seattle, out of the 10 top ranked highest rental markets, we're number 9. Right. Is not going to go down anytime soon.
And I think as mortgage rates go up, I think you're going to see rents go up. Because
everything goes
up, right?
Exactly.
That's because rates go up and this is something people maybe do or don't know, but rates typically go up in a good economy. And a good economy means housing's going to go up.
Exactly.
It's not. It's not on an island per se of just interest rates went up, nothing else is affected it or is affected.
Exactly. Well, like I've talked to some clients here recently, and I said, in June, Forbes they posted that it's still 41% cheaper nationally to buy than to rent. And basically, they've updated their rent versus buy analysis, and in it they've proven that mortgage rates need to get up above 10.5% before renting is considered the better option versus buying.
Why is that?
It's just their formula.
The
way it all factors into is that
with appreciation
with appreciation at 10.5%, then your mortgage payment will start to become higher than your rent payment. But they're factoring rent increases as this all goes up, and it's Forbes. Do you argue with Forbes?
No, why would I? But also, they even said in Seattle it's less expensive.
Yes. Even though they're saying that nationally it's 41% cheaper, even though we're ranked number 9, we're still considered 40% cheaper to buy here versus renting. Now, this is a hard one for some of the first-time home buyers who are making that leap because they're thinking, my mortgage is going to be, $1,800 a month. I'm paying right now $1,500 a month. they're forgetting, though, their mortgage is going to stay at 18.
Right.
That rent is going to be above 18 in about 2 years.
You know, I was talking
if not sooner.
I was talking to Ryan Leopold about this yesterday, and we were discussing, the rent versus buy analysis kind of went out the window for the last 5 years.
Well, yeah, because there was cheap money and everybody said jump.
It just jumped. And now it's really starting to come back, especially as rents come back. There's a trend of rents increasing. There's a trend of mortgage rates increasing. And that analysis seems to be a lot more prevalent than it was even 3 months ago.
Yes. Oh, absolutely. I mean, I think the rate increase, too, is affecting maybe the lower end of the buying market because they're the ones who are like, a little rate
now
goes
they're
up.
a little deer in the headlights now.
They're like, wow, maybe I shouldn't have been so picky the last 4 months shopping, and maybe I should be a little more open-minded to some places I thought no, because now I have less money, But when you got a couple working together or, middle range, price range, they don't seem to be too affected by it at this point. But the reality is everyone's like freaked out. Oh, my gosh, we're at 5% almost. Where were we in rates 5 years
or
ago?
2 years ago. I mean, 3 years ago. 3 years ago, I think we were at over 6.
Yeah. So, but again, we have a short-term memory loss in real estate.
And the long-term memory loss. We only have short-term memory.
Oh, yeah, that's true.
Short-term memory loss, Eric, is something very, very different.
Well, yeah, I forgot. It's kind of hard to remember all that.
That's right. Do you tend to? I mean, when you start looking at the amount of people that maybe have gone on the fence, off the fence. We were also discussing this yesterday, but do you see people jumping in, or are they freaked out now they're jumping out, or does it matter their price point, or first time home buyers, or?
All of my people are still into it. I just have one who's wavering right now, but they're in a contract. So hopefully it'll all go good, and they'll get the home.
The wavering one is under contract.
Yeah. And that's because suddenly they're becoming realistic of where the rates are.
Right.
Even though we talked about it, they just, they weren't quite grasping it. And it's a lot to grasp when you're buying, especially a first-time buyer. But all my other buyers, they're fine. They're not like stopping. They're more motivated now than ever to get into a place. They're very motivated. They're on top of it. On the selling end, it's, I have sellers right now. We're getting things ready to put to market, getting the homes ready. They're going to be listing here next few weeks. So, the market's still healthy. Things are still moving. It's not slowed down in my world, at least.
No, I think that I don't necessarily think the amount of transactions has slowed. I don't think that the pricing has slowed. I think the frenzy around every house is what slowed, because we don't hear people talking about, oh gosh, and then here's the 14 funky ways that you can get your offer noticed by a buyer or by a seller.
Right.
It seems to have just hit a little bit more. We don't need to go see the house at 9 a.m. and make an offer by 10.
Right. Or even if there is like the multiple offer situation, I was in one actually yesterday, and we just offered full price, and we came in second. So it doesn't mean it's going to be in this frenzied position. The only reason we didn't get is my client was too rushed to do a pre-inspect.
So tell me this then. Did people maybe who got into these multiple offer situations with 30 or 40 offers 2 months ago, do you think they ended up paying a little bit more of a premium at that point in time?
They might have paid a little bit more if they got escalated, let's say $100,000. Mm-hmm. Possible. But then also you got to look at those people. They got locked in at a rate at what? 3.75, 3.5.
Yeah, whatever it is.
On the long term of their loan, they're going to be a lot happier than the person who's going to be paying 5% on the loan.
Sure.
Because they're going to come out better. And most of these people that are buying now, they're not buying to flip like, years ago. I'll just make $100,000. I'll flip this house in 6 months.
Right.
That's not happening. These people are holding on to quite a long time. They're all going to come out okay.
That is a very different fundamental of the market. I mean, during the boom, it literally, I remember you'd have people, doing loans, you'd have people put zero down. And then a year later, they'd refinance to one loan with 20% equity, right? And then a year later, they would sell for $100,000 and buy the next bigger house.
Yeah. They were playing the odds and it was working in their favor.
Yeah.
But, real estate's like any investment. There's risk involved. Yeah. And you have to think about that. Right now, I think, we probably get a better return in the long time on a home than you probably are in savings with the bank. That's for sure.
Yeah, with that, I was actually going to ask, we do have to go to break here in just a minute. We're here with Eric Robison with Keller Williams. But Eric, what are the biggest risks to the real estate market in Seattle right now?
Well, if I could read the future, I'd be a happy man. The greatest risk probably is low inventory. I don't know if that's a risk. It's just we have so many people moving here and we're not being able to supply enough homes as fast as we can. So that is going to continue to cause prices rising. I mean, we are becoming a major city. We're, San Francisco, they're way up there. They hardly were in the middle of San Francisco City. They weren't hurt that hard.
Right.
By, the recession as far as prices. Seattle's getting there.
Yeah.
We have a healthy, booming economy. Unemployment was in May under 5%. We hadn't seen that since like 2008.
Yeah, in the city.
So we're doing good.
Yeah.
So I don't see a lot of
Unlike
risk.
Detroit, who's bankrupt.
Well,
Sorry, Detroit.
Everything's shifted. But we have a lot of diversity here in companies and infrastructure. That's going to help us, if one company isn't doing great, the others are doing good, things equal out.
Yeah, I mean, I actually, to answer my own question, I don't see a lot of fundamental risk in the real estate market right now outside of a catastrophic rate increase,
Right.
which is almost impossible because that's a national average, that really is a national market. And although Seattle's economy is booming, as I just made the joke, I mean, there are other cities that are not.
Right.
And so there's not a Seattle mortgage market and then a Detroit mortgage market.
Well, I think the mistake, too, is always when you say nationally, this is what's going on, and try to pin it to Seattle as this is this is that. No, every region, every city has a whole different story what's happening right now.